Welcome to Graphite Hub's interview series, a series dedicated to all things graphite. Now, just before we get started, just a quick note that the views expressed in this interview are those of the guest and do not constitute financial advice. We encourage listeners to verify any claims independently, and you can find our full disclaimer in the description below. Now, with that out of the way, we're joined by Glenn Corrie, CEO of Hazer Group. So, welcome to the series, Glenn.
It's Harry, great to be here.
Fantastic. So, many people recognize Hazer as a hydrogen company, but for every ton of hydrogen you produce, you're generating, I understand, about 3.5 tons of graphite. Would you mind
hmm
just talking us through what Hazer graphite is, getting into the technical side of things? What's the purity? What form does it come in? And how does it compare to natural flake or synthetic?
Yeah, good question. But maybe, Harry, before I do that, I might just explain very briefly what the Hazer process does to get to that end product of graphite, which I think is a very valuable product. Effectively, Hazer technology splits natural gas. It splits gas into effectively its raw elements of H, clean hydrogen, and C, carbon in the form of graphite. And as you say, for every unit of hydrogen produced, there's about 3.5 units of graphite. So we produce a lot of synthetic graphite, which is very important, as you've identified. The graphite product is synthetic. It is a very high purity, structured graphitic product stream that effectively comes out of the reactor. And we are in a very fortunate position that we can locally produce graphite for a customer that is essentially in situ to the application that it's potentially going to be used for. So really structured, like I say, high purity, 95% pure. It's got all the elements of carbon nanotubes, as well as carbon onions and other structured um, compounds to it. So it's a pretty unique product. It's not flake, of course, it's not a natural product, but we do have various patents that enable us to take our raw graphite and convert it into high purities if we, through electrochemical processes to higher grade applications for the product itself. So very versatile product in itself, straight out of the reactor, that can be used as a drop-in for certain applications, but also it can be purified and refined and processed to higher end applications.
Okay. And then, so how has the role of graphite evolved within Hazer's strategy? Is graphite an equal part of the commercial equation now, or is it secondary to hydrogen?
Yeah, it's a very great question. If you go wind the clock back 15 years for Hazer, it was a graphite technology with a hydrogen problem. And then fast forward to where we are today, we've got a hydrogen technology with a graphite co-product. So we see them as equal value. They're not economically, of course, because they come at different prices in the market. And I think it's probably a bit easier to put a price marker on graphite as it is opposed to hydrogen. Hydrogen is not necessarily a liquid market, but there is a traded graphite market out there. And I think for various applications, you can start to see sort of prices for that product depending on how it's used. But look, I've always referred to our graphite as black gold. It's a really valuable product that comes alongside the hydrogen. And our process doesn't produce any carbon emissions. So we see it also as a low emissions product. When you compare that against a natural form of graphite or another source of graphite that's come from a mine, say, for example, in Africa or in China, to get to effectively an end user, there's obviously a series of emissions that go with that. Hazer graphite, again, is a low emissions. So it's a clean product that's effectively being produced from gas, and that has a low emissions component to it, but also, as I've said, fairly flexible and versatile product in itself.
Yeah. Okay. And then, so diving into that in a bit more detail on the economics of the graphite, could you give us a sense of what it costs to produce a ton of graphite and how that stacks up against the benchmark that I understand that you've just signed with the green steel of Western Australia?
Yeah, I'll come to it's a good point. I'll come to the offtake contract that we've signed just recently, shortly. But in terms of the cost, we think about more of the cost in terms of the hydrogen side. And we do have a very sophisticated techno-economic model that looks at the various components of our feedstock and the energy that's required to get there. And essentially, Hazer spits out hydrogen at around $1 a kilogram if you're assuming sort of gas prices are around $3 to $4 an MMBTU. So you can almost see how cheap this product can be. It's almost a I don't like to refer to it as a byproduct, but it comes with the hydrogen. So it's in some respects a very low cost product stream. And that puts us in a very strong position as a byproduct or a co-product to effectively be one of the lowest cost products on the market. Again, being locally produced means you don't have transportation cost or processing cost if it's a drop-in application, and we get both product streams having a value component to them. So economically, a very attractive proposition, low cost, relatively high margin product. We've just recently signed an offtake, a non-binding offtake agreement with Green Steel WA, which is a Western Australian steelmaking group that is pioneering clean steel close to Perth. And we have signed a contract for 85 for 10 years, and that's priced at around 400 Australian dollars per tonne. So you can do the maths on that. For Hazer, it's quite a valuable contract in the order of $30 odd million to us in terms of the overall contract value. But it also very importantly puts a price marker on our product. Now, it's the first time we've signed an offtake agreement for Hazer Graphite. So to have pricing in that range, I think, is a really important starting point for us to sort of start to get price discovery for what we see as a pretty valuable product stream. Now, that's steel making as an application. But if you start then jumping into higher end applications, then we're almost certainly going to see prices that are north of that.
And then, so how did these initial conversations go when you are talking to these end users of your graphite? Given that it is, I guess, a unique technology, are they initially a little bit skeptical, or yeah, how does that go?
Yeah, I think there will always be sort of, okay, tell me about this product. It is unique. It's because we use an iron ore catalyst in our reactor. The graphite that comes out the other end is like 95% pure with a small iron nucleus to it, pure iron nucleus. So it's not, so it has I guess, a broad range of applications. If you think about steel making, the contract that we just signed is perfect fit. Iron, of course, is a feedstock for steel making. And carbon or graphite, you don't make carbon steel without carbons. The graphite has multiple applications, not just in the traditional processes of steel making, but also in the electric arc furnace where you find carbon, or at least our graphite, going to be used as a recarburizer. So a direct application there that's drop in. Concrete, asphalt, bitumen, we've qualified the product for uses in those applications, which is a big tick. And then as you go up the scale of applications, again, we've got purification processes that can get us to the very high ends of purity. There is post-processing, but again, we've tested our graphite in multiple industries and multiple applications with big players like POSCO, like Veolia, like Chimera, and others that have basically taken samples. So we've been through a very extensive testing program for the product. It's been years of testing in all sorts of applications. The applications that we see bubbling to the top at the moment is asphalt, bitumen, concrete, steel. And then as we advance the technology, I think we're going to start to see applications in higher ends. We've made tons of batteries with this stuff. And we see an application purpose for anodes and batteries in the long run. But as you pointed out at the very beginning, every ton of hydrogen is 3.5 tons of graphite. It's a large volume of graphite. Our strategy is to target markets that are high volume and very high confidence markets, moderately to high prices, as we've referred to as our sort of immediate strategy. And then in the medium term to longer term, we're going to target a wider, more varied selection of markets.
Yeah. Okay. And in terms of the technology, I understand you have a licensing model. Would you mind
Yeah.
talking us through how that actually works?
Yeah. So we're a technology venture, if you like. We are listed on the ASX, but we employ a capex light model. We've spent about 130 to 140 million dollars developing our technology over the last 15 to 20 years. So it's a very advanced tech, which is in the order of TRL7 to TRL8 in terms of the technology readiness. So you can see how advanced is it. It's been 5, if not more, successful scale-ups. There's been mini scale-ups in between with reactor scaling and other things. So we're on the cusp of commercialization as a technology. A lot of the capital has been deployed. So we're now moving to a licensing model the technology where effectively a user of the technology will license that from Hazer. It means it's an accelerated pathway to free cash flow for us. So we're not deploying big licks of capital to build plants and own them and operate them. This is a big industry that's, of course, serving big markets like ammonia, methanol, refining and petrochems, and of course on the graphite side, some of the other large markets. So the license model fits us. It's a model that I think the industry is familiar with, and that model again just means that we fast forward ourselves into early free cash flow as a company. We've got a strategic partner in Kellogg Brown and Root, KBR, out of the US. They're a very, very large, if not the largest engineering firm worldwide. One of the, I guess, the most advanced in terms of scaling up technologies like ours. They've done it around 80 times. So we're very proud to be working with them to accelerate the scale up of our technology as well as the commercialization through that license model. And we're starting to get already some pretty serious bites for the tech. And I think we're public about 5 of those partnerships.
Okay. And I'd be remiss not to talk about the project that you've got here in the UK, given that's where I'm based at the moment. You know, the UK relies 100% on imports of its graphite. How
That's
how
right.
much interest, given that, the Energy Pathways project could be producing up to, I think, is it 60,000 tons of graphite a
Mhm.
year? How
Mhm.
much interest is that getting?
A lot. And maybe I'll just step back because the UK is actually quite supportive of methane pyrolysis, our technology types. And there is government policy around the support of techs like ours. So we're really pleased about that. And that, of course, has meant that our project in the UK has now received what they call national significance. So it's getting fast track approvals, and Ben and the team at Energy Pathways are doing a very good job of working with the government there to continue to get support for their project. Look, I think, like you've just said, graphite is not produced in the UK. It's imported. You can say the same for Australia. You can say the same for the US. I don't believe there is one unit or many units of domestically produced graphite in any of those markets, and you can go as broad as Europe and other markets. The supply side of graphite is dominated by China, up to 90 odd percent for spherical, but on average around 80 to 90% of the world's global supply comes from China. So that's a massive sovereign risk for countries that are developing energy transition technologies, EV batteries, anodes, etc. And so we see a very strict focus of governments in particular, to secure the supply chains for graphite. And the UK is definitely in that place. It is a critical mineral, and it's a critical mineral for that reason. I was just looking at some research reports in the US. I think the UBS bank has graphite as the 3rd most critical mineral in the US. So you can see it's in the top 5, top of the pops in the UK in terms of criticality. There's definitely an emphasis on securing the supply chains. And Hazer, again, is a locally supplied source of graphite. We produce hydrogen for industry, but at the same time produce graphite locally for this completely separate market. So it puts us in a very unique position as a technology.
And when could we start to see some of these commercial volumes be coming out of Hazer?
So we got a lot of volumes out of this plant already. It's our
Yeah, I was going to
commercial
ask where
demonstration
that is.
facility. Yeah. There's sheds full of it, and tons of it. So it's a lot of that's been used for testing, which has gone very, very well. And some of the supply offtake that we've got in Western Australia will be sourced from that as well as future plants in the next couple of years. I think we've got a couple of projects. We've got one in Canada that is advancing very well. That's got a 2-year build window on it. So I think that's certainly before the end of the decade. I think our project in the UK is as well end of sometime this decade. So in the next 2 to 3 years, you're going to start to see more and more Hazer projects and facilities take a final investment decision that will lead to large volumes of graphites. It's a pretty exciting technology. We've got a deep pipeline. Projects are starting to come, and the stars are starting to align on for us. We haven't talked about graphite a lot for the last 3 or 4 years just because of the hydrogen emphasis. But as the hard truths of green hydrogen have started to emerge and the difficulties and the cost associated with electrolyzers, there's been a big pivot towards methane pyrolysis and the added benefit of the graphite co-product. It produces hydrogen as well as a critical mineral, and it decarbonizes gas at the same time. So it ticks a lot of boxes for industry.
And looking ahead to the next 6 to 12 months, what can we expect to see come out of Hazer?
Well, we're currently focused on converting our pipeline into licenses. You're starting to see that emerge already. I've talked about the 5 projects that we have with EPP and in the UK, POSCO in Korea, Chubu Electric and Toyota Corp in Japan, Fortis BC in Canada. So they're big projects with big players. The next 6 to 12 months is all about moving those projects forward. It's about converting more of our pipeline. Our pipeline has currently got over 50 opportunities in it. So it's converting some of those. 7 of those are very, very live at the moment. So you should expect to see more projects emerge with big players that see the value in the technology. Graphite sales, of course. And we've locked away our first graphite offtake, which I think is a really important signpost for our technology, that we can sell both products and that we can sell it at a decent price point. So that's strong validation of our tech. More strategic partnerships. We've got a strategic partnership with Mitsui out of Japan that we've had now for several years, that is about developing our product, but also developing the markets for offtake. And we've used that partnership very strategically to advance the uptake of our technology. So you'll see more out of that as well. So a really exciting 12 months ahead. We spent the last 12 to 18 months setting the commercialization fundamentals and getting those in place for the commercialization deployment of our technology with KBR on board, the markets and the strong tailwinds of turquoise hydrogen, the graphite markets emerging, and strong partnerships. I think you're going to start to see a strong momentum behind Hazer and methane pyrolysis in general.
Yeah. Okay. Well, no, it's an exciting time, Glenn. And yeah, thanks for coming on Graphite Hub's interview series. It's been a pleasure chatting to you and yeah, understanding the company in more detail.
Thanks for having me, Harry.
Fantastic. Well, thanks everyone for tuning into this episode of Graphite Hub's interview series. We'll see you next time.